we've got a phone call from Hawaii. I think that this is probably going to be Melissa Ortega. Phone number ends in 6678. Hello. Hello, is this Melissa?
Hi, Amy. Yes, it is.
Hi. Welcome.
So
What's your question?
hi, Tom. This is just
Hello.
really, really great information. I have 8 investors. I have a C Corp in Delaware.
Okay.
I've, done some good fundraising in the beginning of my path, and now it's just come to a complete standstill, and I'm struggling to try and figure out how to bring in some more investment money. And I did do projections, and it cost me quite a chunk of change to have 5-year projections, and they're 52 pages long.
Oh my God, that's way too much. Yeah.
And so I don't know. Obviously, I don't think that that's completely necessary. I don't have just a product that it's done for. There's, 5 products, rolling out 5 products over the course of that time. I think that that's why why part of it is so much.
Okay.
But how do I condense that or something to give it to somebody that they don't have to go through 52 pages of stuff to figure?
Yeah. Well, I think, you have a summary of your projections. So, like I said, what I've seen with institutional investors and a lot of angels is, so you have one page, you have the monthly look, and then you have 2 years, and that's just one column, year 2, year 3, and so they get a good sense of, what's involved. And these are, you have an existing business, it sounds like, so there's a lot of credibility to your numbers at that point. So, you could probably show them your QuickBooks or whatever you use to do your accounting, and even do that, one of those types of reports just as a summary.
We haven't had a lot of sales yet.
Okay.
But
you have expenses, right?
What's that?
You have expenses.
Oh, yeah, we have expenses.
So those are accurate. Those are accurate.
Yeah, we definitely have expenses.
So at least, they know what it's going to cost, which is important.
Okay.
That at least there's lots of clarity there. So, the front page, that summary, a lot of it will be listing of expenses. And you have credibility on that because you've been running these expenses and kind of what they'll be. In terms of the projection, the more you can tie it into what you've done already, the better. So,
these projections were done based on if we were fully funded, this is how it would look.
Okay.
If we had raised $1 million, this is how it would have rolled out. Of course, we've only raised a quarter of that, so it's I'm doing it on my own. So our projections are not matching what we had originally planned out because it's more bootstrapping.
Okay. So for the revenue side, I would probably just throw out, unfortunately, what you spent on those on those expenses, and just go from this idea that if you have any proof points on sales already, that's important, because then you can show, okay, let's say I spend $10,000 on marketing and that gets me $30,000 in sales or something. Any way you can put together your model of, because you want to show that I put money here and X comes out over here.
Okay.
If I can show that, and if I can prove that, it's even better. So that's kind of thing. What is the leverage? Is there some leverage here that I put X amount in marketing and I get some more sales out of it? Now, it also may be that I get sales. I don't know what you're saying. Maybe there's repeat business, there's ongoing business, and things like that. There's a lifetime value of the customer. So, but building on the revenue side really is about what's your cost of acquisition and what is the lifetime value of that customer.
Right. Okay.
And if you can do that one slide.
Sure.
Yeah.
Sure. Yeah. I just want to try and condense it down a little bit and was just trying to figure out how to convey, what we were doing.
So what? Do you sell a product that's kind of, they sell it and that's it, or is it ongoing?
Yeah, basically, yeah.
Okay.
They buy it one time, or they might buy it as a gift for someone else, or maybe 3 years down the road they need another one,
Okay.
Kind of.
Okay.
But mostly it's the repeat buyers are, now I want one for my sister, and now I want one for my mom,
Okay.
So.
Okay. And there's ways you can do that, model that, saying, if we sell one, there's 50% chance that, they'll talk to someone else, their family, and they'll buy one, and you can model that into your spreadsheet. And that, you do that, say, over a 3-year period. So, but again, trying to figure out what is it that really costs you to buy a customer.
Right. Yeah, the acquisition of the customer. Yeah. Okay. All right.
Yeah. And then that ties into your revenue model, because then you can say, okay, if we raise $1 million and we put $500,000 into marketing, I can then plug that into the model and figure out what we're going to get revenue.
Right.
Okay. Great.
If it's over 50 pages, no one's going to get that.
Exactly. I don't look at it.
Your eyes glaze over on that.
Yeah. Most people won't read that. VCs won't read that.
Yeah. Okay.
Cool. Yeah. Melissa, did that take care of your question?
Yeah, pretty much. I won't take up any more time. I'll let somebody else go.
Okay. We've got time for 2 more questions. I know so if you're on the line and you have one that you want to ask by phone, press *2. That'll raise your hand. And we have one from the webcast while we're waiting for people from the phone to put their questions in. Again, let's see. From your experience, Tom, how long do you expect to push your company before evaluating if it's a long-lasting company versus a company that just isn't going to go?
Wow, that's a great question. I'll tell you, I've talked to people where the famous one is when Steve Jobs got back to Apple in 1997. Mm-hmm. And Michael Dell said, the best thing for Steve would be just to shut down the company and give the money back to the shareholders. And obviously that would have been the worst thing possible to do, right? So, I'll tell you, I've seen people, I would say more than not, I've seen people struggle, spend so much time and go in circles, and where they should just cut their losses and move and do something else or pivot, try another approach. Now, in very few situations I've seen it where they just stuck it out and it paid off. So I think timing is so important in business, and it can take a long time for customers to agree with you, and and you just may not have enough capital to get you that far. That's where venture capital is so important, because they realize that. They know that it may take 5 or 10 years to get to the finish line. And if you're bootstrapping and it's really it's something that takes you a long time, try to find something that you get more immediate results out of, because you just may not last to get there. So I don't know. That's a great question. I don't think I have a great answer to it. But I would say with any type of startup or new business, the odds are really stacked against you. But I think when I was young, I didn't know that because I was stupid. And as you get older, you kind of realize that. But ignorance is bliss. But I would say if you're not getting, if people tend to give away your product, or it's really tough sale or long sale, and usually those things don't change. I've seen cases where it's just timing is perfect, it's immediate results, people love it, they buy it, and in those situations you'll find a way, you'll get the money, it'll happen. when you're struggling, it's not working. It's pretty tough. In all ways, in terms of raising capital, getting people interested and coming on board your business and things like that.
And even keeping your own energy up.
Exactly.
There's that. That's kind of key to driving a lot of other things. Is your own energy and your own passion and intention in your heart.
Yeah. Well, I'll give another story. I was an investor in a company in 1999. Well, I invested in everything because it was 1999 and people did crazy things in 1999. So I met this guy at Starbucks, and he'd just been fired. And his claim to fame was that he was the guy that would take over Casey Kasem's spot on the top 40 whenever he was gone. And when the radio station got bought out, they kicked him out. And he had 6 kids, no job, and he had the worst executive summary possible on the face of the earth. It was, spelling errors and things like that. And his idea was to come up with prepaid debit cards, and I thought it was kind of interesting. But one thing about this guy was that he had so much passion, so much belief in his idea. It was contagious. I invested. And it was one of those things when after I invested and he was gone and I didn't see him anymore, I was like, what did I just do? This is insane. This guy has nothing. He has a piece of paper, and I invested in his company. And somehow he then got divorced because his wife thought he was insane too. And he was working in his apartment, and somehow he got a deal with MasterCard, which I thought was pretty impressive. And then I introduced him some folks at Texas Angels. They put in $1 million, and the guy would not stop. And 3 years later, he somehow, I don't know how he did it, but he got in front of Sequoia and raised $30 million. And then Sequoia introduced him to Walmart, and he got a deal with Walmart, and it became Green Dot. It was the company that eventually
I know the Green Dot guy. Yeah.
Steve Street. So that was, something where he had a huge idea, tremendous, boundless passion, and really nothing to back it up. But he made it happen. So, that's what it's all about. Those people are not very common, but, they can move mountains. You can move mountains if you want to, and you've got the passion, and other people around you see that, and they'll do things they would not normally do. And that was the case with it.
That's a really, really awesome story. Thank you for sharing that. That's actually, it's really inspiring for people. And some of the comments that I hear from people that are on this call and some of our clients is, how do you keep yourself motivated when it gets hard? Because it always does. There's going to be a point where it gets hard. We've all had it. And where it's frustrating, it's hard, and you get sad, and you get you're doubting yourself or you're questioning. And so it's always great to hear, okay, on the other side of that, a lot of times if you can just reframe it, look at it another way, and just find a way, something extraordinary can happen.
Well, this is the other thing too. He had a clear vision. There was no doubt of what he wanted to do. There was a big doubt of whether he could pull it off, but he was very clear on what he wanted, how he wanted to build this company and what he wanted this company to become. So you have to have clarity of vision and have something that drives you, and everyone else can see that. If not, then it gets really tough. Because I think that's the other thing too. Is just the people are not really clear on what they want to do and what their vision is. And I think he had that case, plus his huge, boundless passion for what he was doing. This is all he cared about in life, really. Kind of sad in that sense. But he was that was it. He had this huge vision that he knew it was going to happen, and he's going to find a way to get there.
Yeah. We were talking about that with some of the pitches that we were looking at the other day. Wow, that guy's got passion, and you could just tell that it was there were a couple of the ones we saw where we're this thing's going to fly because that person's not going to stop.
Right. Yeah.
They'll find a way. They'll morph where they need to morph, and they'll learn what they need to learn. You know,
right.
it wasn't that it was perfect as a pitch even,
right.
by any stretch. In a couple of the cases, it was impressive how much they were in the game.
Yeah. Well, and the other thing with Green Dot, with Steve Street, his original idea did morph in a big way, because originally when he pitched me, it was about focusing on teenagers who could not get credit cards.
Oh.
But the big idea, as he got more involved in this business, this is the other thing, he had no experience in the credit card industry or financial services. He had a good voice, basically, and a lot of passion. But what wound up happening is that realized that the big idea was that prepaid debit cards would be huge with those who could not get bank accounts.
Right.
And that's where the Walmart thing came into play. Now, there was no Walmart in his original executive summary, and there was none of he didn't even know what the underbank was at that point. He didn't know what that existed, you know. So, but he knew this idea was going to be big, one way or the other. So it did evolve and did pivot over time. But his overall vision about this would be a very powerful financial instrument, that never changed.
Mm-hmm. Wow. Well, you know what? Everybody is still hanging on the line here. I think they're hanging on your every word. We've still got a really great queue of people, but let me make sure that everybody's got questions, because I know your time's really valuable. So one last question. Press *2. Who's our last question of the day? Or have we answered everything and everybody's just going, wow? I think there might be a little business love on the line for you, Tom. Does anybody have a question from our callers? And let me check our webcast. The people on the webcast are going, yes, this is definitely handling our question very much. Thanks. So that's all great. I think that's it for questions for today. Tom, thank you so much.
Thank you.
And you know what? That's really generous about the book. Everybody, I really highly recommend, even if you don't win one in our raffle over on the Facebook page, pick up one of these books, because it is really awesome. I've carried it with me to San Diego, and I actually started reading it. I think it was within 2 days of when I got it from you at the pitch. And, even in just leafing through, I could tell there was some really high level thought going on with it.
Yeah.
And it's really approachable. Thank God,
Well, I wrote it in a way that you don't have to read the whole thing. So if you need help with your investor deck, your PowerPoint, there's a section on that. If you've got a term sheet from an investor, I have a whole section on how to look at that. Questions about finances or corporation or legal issues, there's a section on that. So it's all, meant for just, you have a question, not too sure about what to do. You could I try to make it in a way that it goes through the whole life cycle and can, provide some advice on that.
Yeah, well, I really like the subtitle too, seeing your startup through from idea to IPO. Wherever you want to be in there, there's definitely an absolute platinum thought process there. So everybody definitely pick one up. And if you want to follow Tom, I know, Tom, you're on Twitter because we connected there already. What's your Twitter handle?
It's my first initial T and then Taulli.
Okay, great.
Yeah.
Perfect. And is there anything else you want to say or let people know? Any other tidbits, ways they can reach you, et cetera?
So you can reach me at Twitter, or my email is ttaulli@gmail.com. And if you have any questions, and these are great questions here, and just keep going forward and be positive and passionate about your ideas, but at the same time, don't be rash either. There's a lot of things. There's certain things that are accepted about what you do and what you don't do, and there's a lot of time wasters out there. Whether things that just you got to focus on what's important with the priorities. Like we talked about the projection. To me, I wouldn't spend a lot of time on projections. You know, I'd spend some time on it, but I would not spend a lot of time on it.
Yeah.
So things like that.
Great point. And for anybody who is interested in trade show, I'm really excited to announce the issue of Entrepreneur magazine that I'm quoted in a whole bunch in the trade show article is on the stands right now. So the September issue of Entrepreneur.com, of Entrepreneur print edition. Check out the trade show article. There's actually a lot of really good information from several different contributors in there. And Tom, I really look forward to seeing you. I think we're going to see each other on the 16th. Are you?
Yep.
Okay, great.
Yeah, that's good.
Perfect. And everyone, I'll talk to you all again in 2 weeks. We'll get together then. And until then, have a really great time. And remember to just keep your energy really high and to be asking great questions of people who have done what you want to do. So thanks for joining us today. And Tom, thank you so much.
No problem.
And I'm going to just open up the lines for everybody. If anybody wants to say goodbye to Tom and thank you, all the lines are open. So.
Thanks, Tom.
Right.
Thank you, Tom.
Thanks, Tom. That was great.
Thank you so much.
Thank you for sharing.
Thank you.
Wow, that's really fun. I haven't done that way before, but everybody, thank you. And Tom, I'll talk to you soon, okay?
Okay, sounds good.
Bye, everyone.
Thanks, Amy.
Yes, Amy, that was great.
Oh, you're welcome, everyone. Oh, that's so great. I'm glad it was valuable. Bye.
Yes.
Excellent.